Okay, so now let's look at a price ladder play and a momentum play, that is, in the gold market. And what we're going to be looking at here is what's called the gold double whammy play. And we're going to be looking at momentum, but we're going to mix this up again, which is going to include a reversal play as well. But firstly, what we'll be looking at is a momentum play and how we're going to execute it. Now, the momentum play for gold over here is actually specifically looking at this daily level. I think it was a double inside day break, your classic chart on the daily chart where you expect there to be potentially some stops to be run towards the downside once it trades out this 1262 area. And as the pattern type says here, it's a multi-day breakout zone. So this is where you more or less prepare your charts, but it's what really happens afterwards. It's actually the exciting part where none of your charts would be able to tell you this except your price ladder. But the trading strategy we're employing here is your classic stop hunter approach. So you'd be looking to put a passive limit order over here on the sell side, looking for those stops to be triggered. But because the volume's also picking up here, you could also execute a potential volume slam dunk play. You know, one of the slam dunk plays that we were talking about earlier on, that you want to excuse me, you want to be able to ensure that as the volume and the volume activity and the auctioning speed starts picking up, you protected by the auctioning initiative from the sellers. So you could either have a volume slam dunk play or your stop hunter play where you have a sell order at just below the level potentially, or at the level, or a little bit above it, depending on where you think the stops will be triggered. And this is a process of observation in time and recording observation time in order to maximize the specific market you're looking at for the various stop plays. Now, the ladder market environment for a stop play can be high or low volume, and the volatility is not important because you're just trying to locate the stop area. If it's a volume slam dunk, the volatility and the volume is incredibly important, and so is the auctioning activity and the auctioning speed. You want to see a lot of good auctioning initiative going on just prior to the breakout, because if there's good auctioning initiative prior to the breakout, there's a greater chance of the market moving. If it starts trading down here and it's losing momentum, becoming lethargic, well then a volume slam dunk play is not the ideal play that you want to execute. You'd rather wait and actually put a stop limit below the 1262 with a lying with your passive bids to exit. Now we're going to have a look at this. We're going to have a look of when the market stops through, and then we're going to make some really clear observation of a blowout attack reversal pattern. So the reversal pattern, which will look at a couple of light low volume nodes where the market kind of exhausts itself after the push, and what that exhaustion looks like in order to execute for the reversal trade towards the upside. So there's a bit of an advanced pattern that we're looking at, but it becomes less advanced the more you practice and the more you see it in your own personal observations. So let's have a look here of when the market is trading in real time. So if you just bear with me, let's put it on play and let's look at the activity. So you can see over here the market's trading at the moment. There we go. Now there the stop. So you've noticed the stop. So there's a stop just below that level. We stopped down all the way to 1260, so around a 20 tick move. And as you can see, this 20 tick move, we've left a little bit of a light volume zone over here. So let's have a look at this and this observation. And as you become more accustomed to the ladder, you're able to pick these up really quickly, really dynamically in real time. So you can see nothing really traded over here. And then we've got a very large, and you can see by the shape of the delta on the trading technology, it's a complete 454 lot sell. So that was a stop that was executed, but the market traded straight back above. So the market's traded straight back above. We've got this low volume zone over here. So if you're looking for low volume passive entry, then you'd probably want to start executing it around here from the short side. But the first thing that really brings alarm bells to me is that we've got a low volume zone over here, and you also have a light volume zone over here, but you have this big order over here, and the market immediately is rejected. So that's a potential blowout reversal pattern that we're looking at. So now if we have a look at this market trade at the moment, you'll start seeing, as the market's trading, you'll start seeing it moves away from this area very quickly and trades at original low volume zone. So firstly, the market's immediately telling me that it's struggling on the downside, and we've left this low volume zone, and we already traded through the previous low volume zone. So immediately the buyers have taken control over here. So the fact that the buyers have taken over, we've left this low volume zone over here, we traded through this low volume zone over here, and we're holding the bid side. So the entries for the volume reversal is you want to start distributing your clip. So effectively, how you want to start distributing your clip, you want to start positioning yourself anywhere so above this low volume node over here. So we've got this low volume node at this price, only 52 lots being traded. So you want to start positioning your clip if you feel this is a blowout reversal because of the low volume node and the fact that we traded through over here and we're trading near enough the breakout point. You want to start distributing your clip from just above this 52 lots. So anything here that we've got a nice order zone over here. So at this price, the 160.8, the 1260.8, and just scatter your orders. And what you can do, whilst you're scattering your orders, you can build your core position. So you can put one lot here, another one lot here, another one lot here. As you get filled and the market is rotating, you can start exiting some of your size for a 2-3 tick scalp, whilst you keep your core position. As the market comes back again and oscillates in this range, you could keep on feeding and manipulating your size. So you're building your core position and you're bringing your average price down as you start scalping for the profit. So now let's have a look over here as how where the market oscillates, and let me just make this picture a little bit more clearer for you. So as I've mentioned, we have this this key little low volume zone over here. So we want to be looking for potential longs in this zone over here. So we're looking at this area, and then as we start trading, so we start trading the zone now over here, you can see that the market is oscillating, so it's offering down. See some buyers keep on stepping in, so you could distribute one clip over here, a couple of clips, so it keeps it coming back to the 1261, and someone sits and kind of keeps on reloading the bid. Now it gets reloaded back again, 1261 keeps on getting reloaded. So you have your clip in there. You might have two clips, so you could have been filled twice, and then you offload some of the clip as you sell out of that original buy, and your core position is now starting to go on side. So again, this non-traded area is the first indication that the market doesn't like being out there, and also a first indication that was a volume potential blowout move, and the volume blowout move is typically a great area and a great turning point for reversal pattern for the market to start auctioning back towards the other side, as all the positions have been flushed out and all the stops have been flushed out, and then the market finds new buyers and new entrants because there is no more activity towards the downside. And what actually proceeded to happen over here, the market rotated around here for a period of time, and then actually started moving northbound, and then traded a good 2 points higher after that, after this inability to trade back below the 1260.5 area. Your risk on this trade is really the low, but you can actually start protecting yourself below this 450 lot that got traded over here. So whilst you're distributing your clip over here, if you look at this reversal play, you're looking for anything between 10 to 50 ticks towards the upside on the back of that blowout reversal trade. And with that type of reward, your risk is really only situated around 10 ticks from the low of when you start distributing yourself above the low volume zone, and you're looking for a continuation move. And the execution strategy is multiple lots being fed, scalping around most of your lots while keeping one core position.